3 8-pillar stocks we're going to analyze right now, look at their 8 pillars, and use our software to figure out what price we want to pay based on the information we see. First one, AutoNation. Mo, selling car business has been quite frothy as of late, has it not?
My understanding, it's pulling back a little bit, but I guess we will see that.
Yes. So let's look at the revenue for AutoNation in the last few years. I mean, it's actually not as high as I would have thought. Although look at this jump from 20 to 22 to 21 to 22.
Right.
Now, there still are supply issues here. And I believe AutoNation focuses on, are they new dealerships or are they used cars?
I think they're both.
Are they both?
Yeah. AutoNation, I believe, is the one with they do something with breast cancer. They have that pink logo everywhere. You know what I'm
Yeah,
talking
it is new cars too. Look at that.
I think it's both. There's one on Center Ridge. I think it's like a Ford dealership or something.
Okay.
Wow, look at that net income jump.
What is it?
It went from $385 million to $387 million to $1.14 billion to $1.5 billion.
So the first thing I'm going to say here, guys, do not make your decisions based on this. This is clearly a fluke of an event. You know, the car business has been very fun. Like, you know, just recently, like you're not going to even get discounts on new cars. They're just basically like, this is the price, take it or leave it. We're not going to mark it up to market, but we're going to sell it to you at MSRP.
They've been buying back a lot of shares too.
Have they?
Yeah. In the last 5 years, they've gone from 90.5 million to 55.5.
And look at the Great Recession.
How bad was it?
480, 350, 580, 300, 300, a loss of $1.3 billion back to profit.
Yeah.
Look how long it took them to get that $1.3 billion back.
Yeah, this is.
I believe AutoNation's is a stock that Bill Gates owns a lot of.
Really?
I think.
I didn't know that.
I had a dream last night with Bill Gates in it. Is that bizarre?
Kind of. What happened? What happened?
What happened? All right, so let's go to analyst estimates.
All right.
Oof, look at that. Even analysts.
Yeah, okay. I was going to say they better be realistic about this.
Guys, I'm just going to do this very simply. I'm not going to use stock analyzer tool. I'm basically going to look at this going, okay, multiply this by 12 or 15. So you need to stock it. Actually, it might still make sense.
The problem for me is the recession. I mean, it's going to get, and not only recession, coming off of these extreme
But I will say this.
revenue and profit
I get that. You're right. How's the cash flow? This is interesting. Cash flow is huge.
There too. Yeah.
How's the cash flow back in the recession? Great Recession. Okay, very slight negative cash flow in 2007. So it was probably write down a lot of inventory. That's why they had. Oh, wait, we didn't even look at that. Let's go see what it was. Maybe it was some big write-off. Other income and expenses, $1.75 billion. So guys, look at this. Back in 2008 and 2007, they had a $1.75 billion other income and expenses. I want to understand what that is. Because apart from that, you add that back in, they actually made record money.
Yeah.
Interesting. Very interesting. Actually, Mo, I don't know if I'm opposed to this.
I mean, to be fair, they actually do have a pretty great business model. It's the new car side and the used car side. And so used cars are probably going to sell, cheaper cars are going to sell more in a recession. Newer cars are going to sell more in good times. They kind of run the gamut.
Oh, wow. It's actually pretty good profit. Gross margin. Well, the gross margin is a little exaggerated. Let's see what the gross margin is in past years that were normal. Let's go back to before COVID, before the vid. Okay, it's about 15%, 15%, 15%, 15%. Are you hearing a pattern here?
Yeah, 15%.
Yeah.
And now it's almost 20, so a little jump.
But their overall margin was about 1.5 to 2% overall. All right, let's go to stock analyzer tool. I'll use it on that.
All right.
I'm going to go, oh gosh.
What are you going to put in?
-3.
Okay.
-1, 1.
Okay.
Profit margin, 1, 2, 3.
I think that's good.
Free cash flow margin, 2, 3, 1.5, 2.25, 3.
Okay.
PE, boy, it's a lot of fluctuation. I'm gonna go with 9, 12, and 15.
Wow.
9, 11, never forget, and 13.
Okay.
9, 11, 13, and 12.5, 14, 15.5.
All right.
Okay.
So based on those numbers that you pulled up, which column are you erroring closest to? The middle one.
Yeah.
Okay.
So the question is, like, you know, are car dealerships going to change? I think the way car dealerships will change in the future is more set pricing if there's going to be a big change. Like,
Yeah.
I just personally, for
Ford
me,
CEO is really pushing that right now.
yeah, I like the fact that Tesla's like, this is the price, take it or leave it.
It's fantastic. I loved my transaction buying a Tesla.
Yeah.
It made me want to like
It's
buy
just like,
another
just
one.
tell me, because the second I know I have to negotiate,
hate it.
I mean, it escalates my anxiety.
Even doing it over email, like we'll do it. Send them back. Come on. What are we doing here? Just give me a fair price and let's go.
Well, I hate that term, fair price.
No, whatever.
What is a fair price?
I don't know. Who cares?
Exactly. It's
just give me a price and let's just do the deal.
All right. So I'm going to add this to my watch list at $80 a share.
I'm not adding this to my watch list.
Yeah, it's a little bit tough, but I'm going to, I think to myself, like, maybe it could. Yeah. All right. Next stock, Rowe Price. Let's look it up. Rowe Price is a company I like a lot. Why is that, you may ask? They're one of the biggest 401k providers, and every single month in, month out, people save in their 401k. Good markets, bad markets, money keeps going up. Let's go look at their 8 pillars real quick. 8-pillar thriller. Look at this, 5-year PE of 12, high gross margin, high profit margin, big dividend, high return on invested capital. This is a company I want for a long, long time. Analyst estimates, not much growth in net profit. Don't know why, but not much growth. Revenue, not good. So let's go look at how they did back in the 2008 financial crisis in terms of revenue.
I actually just looked at that. They saw a hit in 2009 and then right back. Same with profit.
But they never lost money, did they?
Nope.
Okay.
And go look at scroll down to the profit real quick and just see how quickly they recovered.
Yeah, big time.
Yeah.
So
that tells me people got scared, took their money out, put it right back in.
So let's see. What is that? What were they in 08? They started at $60 basically. It got down to $21. Look at them here. They were at $222 back in August. They hit a low of $93. $224 was their all-time high. They were at $93 in, I don't know when, recently. And that's one of the things we're going to add, guys. We're going to add the date of the 52-week low and high.
It's probably March of 2020.
No, with the low?
97.
No, the 52-week low.
Oh, the 52-week low. That was
September, October.
October, yeah.
Yeah.
Probably around the 20th of October.
All right. Well, let's go. Stock analyzer tool. Now, I will say, I think stocks are going sideways for the next 10 years. So but they're going to be adding money to their accounts every single year and charging fees. So I'm going to do this. Let's see here. Okay.
10-year analysis or 20?
I'm doing I should do a 20-year analysis. That's actually a good idea because this is the kind of company that I want to own for a very, very long time. And the 20-year analysis gives us a lower price. And so if you use this software, just remember that going forward. All right. 122 is the current price. Mo, tell me your assumptions.
1, 3, and 5.
Okay. I did 3, 5, and 7.
28, 30, and 32.
Can I explain why I did 3, 5, and 7?
Yeah.
Even if the market goes sideways for 10 years, they're going to add money every
100%.
single. Okay.
100%.
Got it. Next, go ahead. Profit margin.
28, 30, and 32.
I did 30, 32, and 34.
Okay, I think that's fine. Free cash flow margin 25, 27, 29.
I did 30, 32, and 34. Even though you have a good reason in the 10-year.
Yeah.
You know what? I'm going to adjust this slightly. Okay. PE.
14, 16, 18.
13, 15,
I
17.
think that's fair. Price of free cash flow 14, 16, 18. Yep. Return 12, 14, and 16.
That's what I did.
Okay. Let's see.
The analyze button. The company's currently at 122. I have a high price of 120 to 130, a low price about 100, mid price of 120. Why do I have it at 85 then? Well, the reason being, Mo, what do you have?
I have 105 to 95 on the high side, middle ground 93 to 83, low ground 83 to 74.
Okay, so
it's been really close.
So yes,
that's how I look at this.
And the reason I have it at 85, even though 85 is my low limit, below my lowest number, I believe that if it got to 85, stocks are really plummeting, and I'm going to ride that momentum and just only do it then. But I do think Rowe Price, like I compare it to Schwab. Schwab's financials are garbage compared to Rowe Price, in my opinion. So I'm focusing on Rowe Price and buying it for the right price. But I just look at it going, I like their balance sheet. I like everything about them.
I threw it in at 90 on my watch list.
Good boy.
Good boy.
Okay. Final company. DGX, which is Quest Diagnostics. This is a company that skyrocketed when COVID hit because everybody needed to get testing.
It went from a low of $73 in April of 2020 to a peak in, when was this?
174.16, December 30th, 2021.
Isn't that crazy?
Yeah.
Heck of a run.
All right. So let's go look at the income statement because that's what I'm going to first focus on here.
I assume we'll see a big bump. Yeah, pretty big bump.
Actually, not, but it's starting to come down now, and that's the thing.
I was literally expecting double, triple.
Yeah, I was too. Okay, but it's starting to come down now, which shows, I mean, that's pretty obvious. Profit.
Same, it's coming down.
Yep, it's coming down big time. Shares outstanding. Let's go look at the 8 pillars. Check marks all around. I think we've got a discount.
They generate a lot of free cash flow.
Yeah, they do.
very consistently.
High teens enterprise value to free cash flow and earnings. All right, what are analysts saying about this? Okay, makes sense. They're still seeing declines. So guys, because of COVID, I think you got to sit there and really do a normalized EPS, what's it making during normal times. And in this situation, I don't think it's going to make the $10 a share they want. Revenue, they don't even go a couple years out. So let's go to Stock Analyzer and be kind of conservative.
I'm going to do a 10-year analysis here.
Yeah, okay, I'll do 10 years as well. I think you're right. Although I'd make the argument that okay, 10-year analysis it is. Okay.
I think my high side is a little high on revenue, but we'll see.
Yeah, we'll find out. I like my numbers. I like my numbers a lot.
Okay.
In terms of my assumptions. Mo, you might want to race behind you.
Okay.
At some point. But this is what we do, guys. We're sitting there and saying, where is this business in the cycle of its current business model? And I think Quest Diagnostics has surged because of COVID, and COVID's probably on the outs, or it's definitely it's surging now again, but wear your mask. Go ahead. So what are your assumptions?
Mine in my pocket. -1, 2, and 5.
I put 0, 2, and 4.
Okay. And I honestly think that -1 could be too low and 5 can be too high.
I think it's a good assumption to make.
So profit margin 10, 11, and 12.
That's what I did.
Free cash flow 12, 13, and 14.
I stuck with 10, 11, 12.
Okay.
I just stuck with it.
All right. PE 14, 16, 18.
I did 13, 15, 17.
Okay.
Same with price free cash flow.
Same. And 12, 14, and 16.
I did 12, 13 and a half, 15.
Okay.
Analyze button. The stock's currently at 150. All right. So right here. Low of 85, a high of 130, middle price of 105. So I know where I'm going to put my my watch list number. What was yours, Mo?
Low of 83 to 99, middle ground 105 to 125, and a high ground of 132 to 155.
So what are you going to add it to your watch list?
I actually think I'm going to add it to my watch list around like $90.
Okay, I put 100.
Okay.
And the reason being, again, 100 doesn't mean that's where I'm buying it. It means that's the price I'm going to look at to sell puts on it. So guys, if you like the software, we have thousands of people in our community that talk every day. You can go in there and talk about all 3 stocks we've had here. They use our stock analyzer tool as the most important part. And we have a great offer, 1 month, risk-free. Sign up, pay for the first month. If within 30 days you don't like it, email us. We will give you your money back. No questions asked. No brainer. It's only $1 a day. Thanks, guys.